All right, so today we're going to look into Tilray's Q2 results for 2025.
Okay.
We've got a couple things to look at,
Uh,
their press release and their SEC filing Form 8K.
right?
And what's really cool about Tilray is they're not just a cannabis company anymore.
Right.
They're into beverages, wellness products, and more.
Yeah, it's a very diverse portfolio.
It really is. So we're going to break all this down and kind of get a sense of where they are and where they might be going.
It's a very interesting time for a company like Tilray, especially with the changing landscape of cannabis and all that.
Yeah, definitely. And they start out their press release with a pretty good headline, 9% year-over-year revenue increase,
Oh, wow.
reaching a record $211 million for the quarter.
Not bad.
Not bad at all, especially considering they talk about some headwinds in the craft beer market.
Right, and they also mentioned this SCO rationalization.
Yeah, what is that?
So they're basically getting rid of products that aren't selling as well to focus on the better performing ones.
Okay, so like spring cleaning for their product line.
Exactly.
Makes sense.
Yeah.
But they did say that led to an $8 million revenue hit in the short term.
Right.
But it seems like they think it'll be good in the long run.
Yeah, they're projecting a $20 million reduction in net sales by the end of the fiscal year because of it.
Wow.
So, yeah, they think it's a strategic move that will pay off.
Okay, interesting.
And then their gross profit jumped by 29%, which is pretty impressive.
That is good.
Yeah, it seems like they're getting more efficient, squeezing more profit from every dollar.
Now they have these four main business segments:
Yeah.
beverage, alcohol, cannabis, distribution, and wellness.
Right.
And the press release says that all of them saw year-over-year growth in gross profit, but they seem really excited about their beverage alcohol performance.
Oh, for sure. Their beverage alcohol segment is doing great.
Yeah.
They had a 36% revenue surge.
Wow.
And their gross margin is much better this year compared to last year, probably because of all their craft beer acquisitions and expansions.
And they even have this plan, Project 420.
Oh, yeah, that's their big optimization plan for their beverage business.
What is that exactly?
It's a $25 million initiative,
Okay.
4 key pillars: operational optimization,
Yeah?
cost savings and synergies, portfolio optimization, including SKU rationalization,
Right.
and brand and business investment.
Oh, so they're putting money back into growing the business.
Yeah, and they've already achieved $17 million of that $25 million plan, so they're making good progress.
That's impressive, all right. But we can't forget about their original business, cannabis. How did that segment do?
Well, it's kind of a mixed bag there. Revenue dipped a bit compared to last year.
Well, how come?
They say it's because of pricing pressures and excise taxes, mostly in the Canadian adult use market.
Ah, I see.
But their international cannabis revenue actually grew by 25%.
Oh, wow. Okay, so we're
And
doing well globally.
yeah, it shows that their reach is expanding
Mm.
and that cannabis is becoming more accepted globally for both medical and recreational use.
Okay, so good news and bad news there. Now let's talk about the big thing in the room. The press release says there was a net loss of $85 million for the quarter. That sounds a little scary. Should we be worried?
I wouldn't worry too much about that net loss figure. It's important to understand that $75 million of that is non-cash items,
Okay.
like foreign exchange losses and stock-based compensation. That doesn't mean that cash is actually leaving the company.
So it's more of an accounting thing than actual financial trouble.
Exactly. And another $8 million was from one-time non-recurring costs. The important thing is understanding the difference between net loss and cash flow. Net loss is just a snapshot in time.
Right.
Cash flow is the real movement of money.
So even with this net loss, they could still be doing okay cash-wise.
Exactly.
Interesting.
Yeah, and to prove that, they reaffirmed their guidance for the entire fiscal year 2025. They're projecting net revenue between $950 million and $1 billion.
Wow. Okay, that's a pretty confident outlook.
Yeah, it is.
But the 8K filing, that's where all the really interesting details are.
Oh, yeah. Tons of information in there. We have consolidated financial statements, revenue breakdowns by segment and market channel, and all these key metrics like adjusted EBITDA and free cash flow.
So let's get into some of these details then, shall we?
Let's do it.
What really stood out to you?
Well, one thing that caught my eye was their adjusted EBITDA, which was $9 million for the quarter.
Okay.
It's a little lower than last year, and they say it's because of Project 420.
Ah, those cost-saving measures.
Exactly.
Okay.
Specifically, the SKU rationalization efforts.
So those are impacting profitability in the short term, but they're hoping it'll pay off later on.
Right. Okay.
And what else?
Another important figure is their cash and marketable securities balance. That sits at a very healthy $252 million at the end of the quarter.
Oh, wow.
And their strong working capital position all that indicates they have the flexibility to keep investing in growth.
So it sounds like they're playing it smart, making moves that could cause some ups and downs now, but will set them up for success down the road.
Yeah, that's the strategy, it seems.
It's not just about looking at the big numbers. You got to really dig in to see what's going on.
Yeah, you need to understand the context to get a clear picture of their financial health and where they're headed.
I like that, all right. But we're just getting started. We'll be back with part 2 of this deep dive where we'll really get into those 8K details.
Welcome back. So, let's dive a little deeper into Tilray's financial statements.
Okay.
Starting with their consolidated statement of financial position, this basically gives us a snapshot of their assets and liabilities
Right.
and equity at a certain point in time.
All right, so what should we be looking at here?
Well, one thing that stands out is their goodwill balance.
Goodwill.
Yeah, it's over $2 billion.
Okay.
And this basically represents the extra money they paid for all those acquisitions they made over the years.
Okay, I see.
Think of it like if you buy a famous bakery,
Mm-hmm.
you're not just paying for the ovens and ingredients,
Right, yeah.
You're paying for their name, their loyal customers, all that intangible stuff.
That makes sense. Yeah, like the value of the brand they've acquired.
Yeah, exactly. And speaking of acquisitions, we could also see the impact of those in their long-term investments.
Okay.
It's a relatively small number compared to goodwill, but it shows they're willing to explore new things.
So they're not afraid to branch out a little.
Yeah, for sure.
But what about their liabilities?
Their current liabilities, which are debts due within a year,
Yeah.
those have gone up a bit compared to last quarter.
Why is that?
It's mainly because of higher accounts payable and accrued liabilities.
Meaning?
Basically, short-term obligations they owe to suppliers and employees.
Okay, so just the normal course of doing business.
Right, nothing too concerning there.
All right, so now let's look at the statement of net income.
Okay.
This shows their revenues, expenses, and the bottom line, the profit or loss.
Exactly. And as we already discussed, Tilray had a net loss for the quarter.
Right.
But when we look closer, it's interesting that their cost of goods sold.
So the cost of making their products.
Yeah, that has only increased slightly year over year.
Oh, so that's good.
Yeah, it shows they're managing those production costs pretty well.
But their operating expenses have climbed quite a bit, haven't they? Especially selling and restructuring costs.
You're right, those are the big factors behind that increased net loss.
Okay.
Their selling expenses have more than doubled since last year.
Wow, why such a big jump?
It reflects their aggressive push to expand and reach new markets.
So spending more to grow the business.
Makes sense.
And what about those restructuring costs?
That's Project 420 at work again.
Oh, okay.
Those costs are mainly from integrating and optimizing their beverage business.
Right, they're streamlining their portfolio and investing in their brands.
Yeah, all that costs money in the short term.
Okay, so it's not just about cutting costs, it's about investing strategically.
Exactly.
Now, for the statement of cash flows, some would say this is the most important one.
Oh, definitely. It tracks all the cash coming in and going out.
So even though they reported a net loss, they could still have positive cash flow, right?
So what's the story here?
Well, they did use some cash in their operating activities this quarter,
Okay.
which isn't always a bad thing.
Right.
It's actually pretty common for growing companies who are investing heavily.
Makes sense.
Yeah.
So where did most of that cash go?
A lot of it went towards working capital,
Right.
especially inventory.
So stocking up.
Yeah, to support all those growing sales, especially in their beverage segment.
Okay.
And they're also spending more on marketing and promotion, as we saw in that income statement.
So they're investing in the future.
Right, hoping that all this spending will lead to more revenue growth down the line.
That's the plan. But is it sustainable? Do they have enough cash to keep this going?
That's the big question. And to answer that, we need to look at their overall financial position, not just the cash flow statement.
Okay.
That's where some of those other key metrics come in.
Like adjusted EBITDA and free cash flow.
Exactly.
So what can those tell us?
Well, adjusted EBITDA gives us a better picture of their core operating performance.
It excludes certain non-cash expenses and one-time charges.
Okay.
Tilray's adjusted EBITDA was $9 million for the quarter.
Okay. And that's good.
It's positive, but
Mhm.
it is down slightly from last year.
So not ideal.
And you guessed it,
Project 420.
Project 420, and that SKU rationalization they're doing.
Okay, so short-term, paying for long-term gain.
That's what they're hoping for.
And what about free cash flow?
Free cash flow measures the cash they generate from operations after all those investments in property and equipment are taken into account.
Oh, I see.
And Tilray actually used free cash flow this quarter mostly because of all that investment in working capital and capital expenditures.
So they're spending more than they're generating right now.
Yeah, which isn't great, but again, it seems like it's all part of their plan to invest heavily in growth.
Okay,
The question is, can they keep this level of spending up without running out of cash?
that's the million-dollar question. All right, well, we'll explore that more in part 3 of our deep dive. All right, so we're back for the last part of our Tilray deep dive. We've gone over the numbers, their press release, the 8K filing.
It's been a lot of information.
It has, so let's put it all together now and try to figure out what it all means for Tilray going forward.
Yeah, taking a step back, Tilray's in a really interesting position right now.
Yeah.
They're shifting from being mainly a cannabis company to being more diverse, getting into beverages, wellness, and still cannabis too, of course.
Right. They're really pushing this image of being a global lifestyle and consumer packaged goods company, which they highlighted in the press release.
That's right.
It's a bold move, especially when you think about all the challenges they're facing in the Canadian cannabis market.
Yeah, those challenges are definitely there.
Right.
You can see it in their recent performance.
Yeah.
The lower cannabis revenue, pricing pressure, all those excise taxes, it's a lot to deal with.
But like we talked about, their international cannabis business is growing,
That's true.
and their beverage segment is doing really well. Plus, they're making those strategic decisions like the SESKI rationalization, even if it hurts their profits a bit right now.
It's a gamble for sure.
Yeah.
Their whole diversification strategy depends on them doing well in these new markets.
Right, and those markets are already crowded.
Exactly.
So they're really putting their faith in their brands and their ability to innovate and grab market share. That $25 million project, 420, really shows how serious they are about the beverage segment.
Definitely. And they're still confident about their overall growth, too.
Yeah.
They reaffirmed their fiscal year 2025 guidance, projecting revenue between $950 million and $1 billion.
Yeah, so we've gone through all this. What's the main takeaway for you?
I think the big thing is that Tilray's changing.
Hmm.
They're making big moves, investing a lot of money, and navigating a really complex market that's always evolving.
It's not just about riding the cannabis wave anymore.
Right. They're trying to make their own waves in a lot of different areas.
And will they succeed?
That depends on so many things,
Yeah.
some of which they can't control.
Right. Like what?
Well, how cannabis regulations change, especially in the U.S.
Oh, yeah, that's huge.
Should make a big difference for them.
And what about the competition in the beverage market?
Yeah, it's tough out there.
Will their focus on the higher growth products and new innovations be enough?
You'll have to wait and see.
So many questions.
Here's one for you to think about.
Okay.
What happens long-term with their SKU rationalization?
Mm-hmm.
Will that strategy of cleaning up their portfolio really pay off in such a crowded market?
That's a good question. And how will all this play out if the U.S. legalizes cannabis federally?
Yeah, these are the things that will shape Tilray's future.
Definitely so much to watch out for.
Keep those questions in mind as you follow Tilray's journey.
Right.
Analyze their moves, see how they're doing, and draw your own conclusions.
Well, that wraps up our deep dive into Tilray's Q2 2025 results.
Yeah,
We hope you learned something new.
definitely.
And as always, keep digging, keep learning, and make your own informed decisions.
Until next time.
See you then!